Did you know that a legendary investor believes that Tesla stock is a buy right now? Today, experts have varying thoughts about Tesla stock, as some believe that the company's stock is still too high despite the dip, while others argue that it is trading at a very low price. Still, a legendary investor has been buying up Tesla shares. You definitely would not want to miss this info. Several weeks ago, legendary investor George Soros tripled his Tesla investment despite uncertainties about Musk's recent Twitter takeover. George Soros, the founder of Soros Fund Management LLC, is a celebrated hedge fund tycoon who managed client money in New York from 1969 to 2011. George Soros is one of the world's foremost philanthropists. He has given away more than $32 billion of his personal fortune to fund the Open Society foundations, which support individuals and organizations across the globe fighting for freedom of expression, accountable government, and societies that promote justice and equality. In the first quarter of 2018, George Soros' investment firm bought a large amount of Tesla bonds, giving the under-pressure electric car maker a major backer, a regulatory filing shows. At the time, Soros Fund Management bought $35 million worth of convertible notes, which are bonds that can be converted into a specific number of common stock according to a Securities and Exchange Commission filing. George Soros, known for his pledge to invest in zero-emission companies, has actively invested in EV companies this year. In mid-August, George Soros increased his investments in several tech stocks according to an SEC filing. The Soros Fund Management opened a new position in Tesla with a total of 29,883 shares worth over $20 million. Notably, Soros sold his 1.26 million shares in General Motors earlier this year. Today, Tesla stock is still trading below $200, which caused a panic among most investors. However, many institutional investors have been buying up Tesla shares during the dip. Although Tesla CEO Elon Musk may seem distracted with Twitter for now, and Tesla stock may have taken a beating this year, legendary investor George Soros seems largely unaffected. Based on a regulatory filing, Soros has taken advantage of Tesla's drop this year and loaded up on shares of the electric vehicle maker, tripling his stake in the past months. Soros' Tesla stake was disclosed in the second quarter, which suggested that he started acquiring shares of the electric vehicle maker between April 1st and June 30th. At the time, the legendary investor held 29,883 shares. As per a Form 13F filing, Soros now owns 89,647 Tesla shares through his firm, Soros Fund Management SFM. The stake was valued at about $16.4 million after a market close of $183.20 per share at the time. Soros' investment in Tesla is a sign of confidence in Musk's strategy, and especially in the fact that he is convinced that the techno king will again make Tesla his priority. Morgan Stanley analyst Adam Jonas said that, while the ongoing distraction of CEO Elon Musk's foray into Twitter will likely expose investors to added risks, the group remains on pace to grow sales by around 37% next year, generate $15 billion in free cash flow, and consolidate its position as the world's dominant EV player. We believe Tesla's gap to completion can potentially widen, particularly as EV prices pivot from inflationary to deflationary. Jonas wrote, "With respect to the Inflation Reduction Act, we believe Tesla is by far the best positioned OEM in terms of potential eligibility for consumer tax and production credits." Even star investor Cathie Wood is loaded up on Tesla shares. In October alone, Wood's ARK Invest bought Tesla stocks twice. Wood bought another 66,190 Tesla shares around mid-October on top of the over 132,000 she bought earlier that month. ARK Invest's first purchase in October was made after Tesla reported a miss in deliveries in early October when Tesla announced its delivery and production numbers through a press release. Wood then made another purchase after the stock fell following Tesla's Q3 report. In mid-November, ARK Invest loaded up on Tesla shares in its innovation, next-generation internet, and autonomous technology and robots ETFs. The company's three funds saw a buying opportunity in the automaker's recent slump on Wall Street. ARK's innovation ETF bought 27,594 shares in the second week of November, while the next-gen internet and autonomous tech and robots ETFs gained 2,909 shares and 9,173 shares respectively. Wood is known as a Tesla bull, and she believes that Tesla will go 10x. For most, Tesla might seem like a pricey stock in terms of valuation, but the company has delivered huge earnings and revenue growth for several quarters in a row. Also, annual earnings estimates show the company's growth trajectory is still very much intact. Experts believe that the future looks bright for Tesla. For investors looking years or decades down the road, buying Tesla right now could make good sense. After all, most analysts believe that Tesla stock is more suited for long-term investors rather than short-term investors. That said, looking over the long term, bullish investors place their hopes on fully autonomous vehicles. While dozens of companies are working toward that end in one way or another, Tesla's lead is difficult to surmount. Tesla's use of cameras, radar, and GPS has been advancing for years to the point that Tesla vehicles are practically self-driving. Tesla has spent billions to build its 2 new manufacturing facilities in Texas and Germany, as well as upgrading its Shanghai plant to boost the company's overall production. The China plant can now produce 1.1 million vehicles annually at full capacity. It closed in on that run rate with a monthly record of 83,135 units in September. The company has also said its energy division, which includes battery storage and solar rooftops, has more demand than it can supply. Sales from that division represented 5% of total revenue in the third quarter. Experts believe that investors have good reason to believe Tesla can further improve manufacturing efficiency in the future. As production ramps up at Gigafactory Berlin, logistics costs should fall as fewer cars are shipped to Europe. Moreover, Tesla is employing a single-piece casting technique in Berlin and Austin that has reduced the number of welding robots by 70% per unit of capacity. That means the company is spending less time and money on welding because it is casting the front body and rear body of the Model Y as one piece of metal. Musk claimed that full self-driving software will eventually be the primary source of profitability for Tesla, and software companies tend to have much higher margins than automakers. On that note, Tesla has a robotaxi slated for production in 2024. Tesla's strong business performance during a challenging environment highlights the automaker's momentum and the powerful demand for fully electric vehicles. That said, it may be a good time to consider the stock while it is still experiencing a dip. Although Tesla's current price-to-earnings ratio is pricey at first glance, the valuation starts to look more attractive when investors consider the company's strong momentum and management's optimistic outlook. Tesla is undeniably performing well, although it faces supply chain and logistics headwinds. The company produced 22,000 more vehicles in the third quarter than it was able to deliver due to shipping bottlenecks. Customers will take ownership of those vehicles in the fourth quarter. That issue could cause 2022 deliveries to miss the company's 50% annual growth target, but it does expect production to still hit that level of growth. Tesla investors currently have high expectations for the EV company, which could make the stock volatile. Still, Tesla has showcased its capacity for disruptive innovation countless times, so risk-tolerant investors should seriously consider buying a small portion of this monster growth stock. Experts believe that investors shouldn't count on any stock to guarantee a certain return over just 1 or 2 years. There are numerous factors like the current supply chain risks. Elon Musk, although most known for being a controversial leader, has also been aggressive with his predictions. The Tesla semi-truck was first announced nearly 5 years ago and is now set to begin deliveries next month. Tesla still lands a Zacks Rank 3 hold with its automotive domestic industry now in the top 27% of over 250 Zacks industries. While there could be better buying opportunities ahead, Tesla continues to trade at a far better valuation than it has in the past. Also, electric vehicles are still a relatively small part of the auto industry market, and the space still has massive potential to grow. Moreover, Tesla stock still appears poised for growth, and earnings estimate revisions are up from last quarter. Patient investors could be rewarded for holding the stock, with the average Zacks price target suggesting a 66% upside from current levels. It is a known fact that Tesla is extremely volatile, but so are other stocks. Even in 2021, when Tesla stock was following a downward trend, an investor said, "Anytime you can get the chance to buy it," as Tesla stock dipped at the time. Tesla shares could go lower even after it is down nearly 50% from their highs. But with its promising growth path ahead, long-term investors might want to take advantage of that decline and buy some Tesla stock now. Subscribe to this channel right now.